Hey guys, welcome to Crypto Trends. I'm Silverbacked, and in this video I want to give you guys an idea of exactly where your favorite top 10 largest cap coins are sitting, but more so a bit of a strategy that I've got a few people I'm buzzing about it, and a few people are buzzing about it in the Telegram community and also the Substack, which is a strategy that I came up with. Everyone sort of knows that I'm doing this like pretty advanced sort of course. It's sort of been doing my head in. As far as how advanced it is, I was thinking I was going to do it, and then use the course material as like an affiliate deal to actually as like a bit of a business. You know, I could grow their business, an affiliate market as one of my my vendors. You know, so because I don't want to spend all my time teaching people how not to get wrecked, but doing this course, it's basically it's taken my knowledge of CFDs and futures and trading and crypto. Obviously, I've got a pretty deep sort of knowledge when it comes to crypto and how DeFi works and all that sort of stuff. And as much as it's frustrated me and tested my patience with all their tests and quizzes and concepts and moon phases and different ways the different market makers work, it's actually deepened my knowledge. So, and they're pretty clever actually, because once you see something, you can't unsee it. Because I've got a pretty good memory for stuff and data. And I've, was it yesterday or the day before? I jumped over the weekend, Saturday morning. I jumped in and I just woke up and had this idea. What if I do this, and this? And then, anyway, so from that, an altcoin shorting strategy was born. Okay, so it's done with strategy. Okay, for you people that are tuning in to know what the top 10 is, basically everything is green. So, like, if you're holding it, hold it still till tomorrow. Most of these coins here, I would actually, if you're managing your own portfolio and you're looking at the top 10, I would go to a weekly time frame, and I would look up what's called smooth Heikin-Ashi candles. Smooth Heikin-Ashi candles, Jack VMK, and I would go in there and I would go add it to your charts, which it looks like this. I'll just delete everything on my charts. I just want to get this out the way for people that are wanting to know, oh, what should I buy, what should I hold, like spot, investors, right? So in here, what you do is you come in, you go the smooth Heikin-Ashi, and then you come in here and you make the len and len 2 length, which is length, is 6 and 6. Now it'll probably be 10 or something like that. I think the way these are used is you can go 5 and 5 is pretty fast. So it'll give you changes more often. 10 and 10 is medium sort of time frame is best, or medium input. And 20 and 20 is if I don't really want to look at this much. I just want to do just the major changes in the market and the market cycles. Then 20 would be very, very the least sensitive. So that's how you do it. I found it 6 and 6, and actually a 5-day is actually ideal. But as far as regularity and people being people, I would not use 5-day. I would just use a 1-week chart or 7-day chart. And then just every day when the market opens. For me in NZ time here, it's every Monday at 1 p.m. But for you, it might be somewhere different. Just have a look. Go to your 1-day chart. We'll go to your 1-week chart. Come in here, and it should say, I don't know, something about countdown, show countdown, something like that. Like labels. I don't know. Countdown to bar close. There we go. Under labels. Countdown to bar close will show you. So this weekly candle's got 6 days and 18 hours. You see that? All right, so that's how you can do it. So basically, go to a weekly chart. If you don't understand EMAs, in the smaller time frames, particularly the 50 EMA is very important. In the higher time frame, the 200 EMA is quite an important thing. But you've got a dynamic EMA which is called Heikin-Ashi, which is setting at 6 and 6, and this is what it looks like. And really what it is, it's another set of candles, right? So essentially when they're green, you're long, or you're holding. When they turn red, you can get out of it. You wait to see this and you go, okay, I'm out. I'm out as soon as it starts doing that. As soon as these candles cross through it, you know, even if there's any part of the body or anything is even starting to cross through it, you can just sort of like ride it up to here. And as soon as you get a wick through it, or a close that goes into it, you know, just get out there. And if you did that, let me just show you how your portfolio would look. Anything breaking through that, so you see that one there, that broke through, it came back up. You would probably get out. That's where I would get out. You could get it a day later, and it could be down here. Yes, it can happen too. But you're holding BTC, you jump out here. That candle went straight down it was bought straight back up again because people are buying up this area. And as you can see, the whole thing is being bought up on a weekly scale by all these buyers coming in, and they still like it. They're still buying it, and it's gone down, and it's showing green, and we're about to pick up where we left off at this level and probably go higher. Certainly from here, it looks like we are, and we've got the first green shoots here. Now this is the smooth Heikin-Ashi. So basically that would be your signal here. Or, you know, the first open and close above, after the candles have passed through the Heikin-Ashi, smooth candles, you can use that as your entry. And then you can basically jump back in. If you're using leverage, what I would do is basically just get your leverage tool, go long position from here, and basically, set up your stop loss, you know, just below where this candle has gone to, and then basically set your risk reward ratio wherever you want, wherever you think it's going to go, and then you cut your losses there. You know, if you're doing if you're getting these right positions and you're having a very small stop loss, you can actually get quite a lot of attraction out of a very small amount of money. You know, 8 to 1. You know, and that would match the previous high. So if you think we're going to get to the previous high, you know, it's just a question: do we go lower first before we get there? Really, as far as the sentiment in the market, we're well above the 50 moving average on the weekly. So that 50 weeks, the average over 50 weeks is pointing up like that. It's bullish. There's a 200 moving average way down here. We're not even heading in that direction. None of the EMAs are pointing that way. So everything's pointing towards the upside. So something like here, like a 10x leverage trade, anything under, if you get the right positioning like this, anything under 25x, you won't get hit by stop hunts. They shouldn't knock you out unless you're over leveraged, all right? Or you're just entering randomly. I'll come to that because that's quite ironic because that's what I've been doing over the weekend with some of the altcoins. But I'll be doing 10x leverage, so I can sort of enter randomly. Anyway, so if you want to know where any of these coins are going, again, I'm basically an advocate of BTC. I think you should own BTC. I think you should chuck it into an Aave, and then borrow against it, so some USD against it. Come over to Bitfinex and start trading here for income. You know. You know, you can make a large percentage of money in a very short space of time, and then, you know, just only have 20% here and then put 80% in Aave, you know what I mean? And then rebalance the two every now and again. The percentage profits here, using smaller amounts of money and you know, 10xing your leverage, for example, in my case, I'm not saying to do 10x leverage. I'm saying that you know, if you know what you're doing and placing your trades correctly and you know what you're doing, you know, under 25x leverage is not actually risky, as risky as just randomly placing your trades anywhere, and not looking at market structure and all the things that an experienced trader does. If you don't know how to trade seriously, I'll be coming out with a link to the training that I'm doing at the moment. But that is really, if you wanted to really step into some pretty serious trading, to master it. Because it's not cheap and it's not easy. I know what I'm doing and it's hard for me, but it's actually been the way they've done it. It's been quite good. Just not to spend too much time on this point, but they kind of smash you over the head with information about all the different aspects the market can do and will do, and how it works, and who does it, and who the players are, and how what you can see, what you can't see, what's fact, what's fiction. And then some of it you know, some of it you won't know. And then this is what I found. And then some of it will start to really do your head in, because like, why are we even talking about this? Show me how to just show me how to make money. God damn it. that's all I want to know, you know. So luckily you got me, because I can just distill everything down into how the hell I make money. I haven't got time. I got a busy life. I got family, wife, kids, whatever, all that sort of stuff, and job or business and or both. And this is doing my head in. I just want to look at something I can look at once a day and just manage myself, so I don't have to get BlackRock or Vanguard or Fidelity to manage my money. So don't panic, you're in the right place. Okay, let me tell you what I'm running through. Now, you know how to do this. You can basically look at the smooth trend over weekly. On Heiken Ashi, they're called smooth Heiken Ashi candles, right? By Jack KMA, I think it is, right? Set it to 6 and 6 on settings. It's pretty easy. 6 and 6. It's not hard, right? And then just when they change color, you go long, or you go short, or you go spot buy Bitcoin, or you sell out right here, right before your whole bag loses 14%. You dig? Okay, so that's basically what my service is here to you, is to show you. There's no point in me telling you what's coming in and what's going out. I will probably be in a situation where I will likely just buy and hold BTC, and I'll just weather these drops. But I will be borrowing against my BTC to go into the markets and then trade it here, right? Because here's the income. BTC just sitting in it and holding it is the actual collateral. That's the money. This is the income generation where I borrow against my collateral, and you know, in responsible amounts, come over here and trade for income. So that being the case, and then I'll rebalance between the two. So both are going to make me money. Sometimes the BTC is going to lose me money, but in those scenarios, I will be rebalancing both scenarios. That when BTC goes down, I'll be re-adding from my balance here when this goes to be becoming 21%, and my BTC holdings in actual real BTC become 79%. I'll take 1% of this account and I'm going to go over and I'm going to buy BTC. Okay, so this basically means I'll be buying spot BTC, or adding BTC spot, and buying and adding it to my Aave account to get my collateral back to, let's say, 80-20. You know, so therefore it forces me to sell high and buy low, and sell high. So that's the duopoly between managing real BTC, and that's the money, that's the income, that's the only investment, not the top 10. And then outside that is I'm in here using these tools to make the income with a small part of my bag at 10x. So I'm basically using 1/10 of the money, if you know what I mean. I'm not saying I'm going to have 90%. I might even have 90% in BTC and then 10% over here. You know, it depends. I'm going to earn my income here as well, because I'm not going to be touching my BTC bags. You know, so I'm just going to be adding to it. So now that being said, I wanted to go through the meme coin strategy I'm using. Now I do have a couple of ideas about how to do this with a portfolio of the larger cap assets, but and I have actually just kicked that off here already, and I'm looking at this unrealized P&L. When this gets to 10%, I'm doing a version of what I'm about to show you in the memes and the altcoins over here with real BTC. Oh, sorry, futures BTC. But I'm doing a test here at the same time. But anyway, getting back into the memes. This is what everyone's been waiting for. 14 minutes 30. 14 minutes 30, I'll just write that down. I'll give you a cue to the people that are waiting for me to come out with this, because I mentioned it in the Telegram, and people are curious, because I've basically increased my account by 50%. This was like $200, it went up to $300, and let's say that everything I'm doing is winning, but it's almost like that. Anyway, this is how it works. But basically, you come into BitConnect or whatever exchange you're on, go to the futures market. Once you're there, whatever's in your account, it doesn't matter. It doesn't matter. You've got $100, you've got $3,000, it doesn't matter, or $10,000. What you do is, obviously, if you're starting off doing this and you don't know what you're doing, just start off small. But just put 1% is. I'm going to try and teach myself and you guys to talk in terms of percentage, because the dollar amount shouldn't matter. If the percentages and the profitability and win-loss ratio and risk-reward is there, the risk-reward is there. I'll show you what I mean. So basically, you come into futures, you hit this drop-down, you go into change, and it'll come up with the highest trading coin of the day, Turbo, USD. Okay, you go into here, you make sure this is isolated so it doesn't go into the rest of your account. So I will nominate how much I'm risking, how much dollars I'm risking. I use 10x, not telling you to, but I'm saying this is what I use myself for the strategy to make it work. So it's pumping pretty high. It's as it correctly stated, like it is pumping high, and that's why it showed up there. And we're pretty much at a high point 1, 2, 3, but it's a little bit lower than that one, which is quite nice. And then what we do is first out, I'll just go 1%. All right, sure, that's it. Now keep it on this one, this particular type of trading. Go market, because you need instant execution. And what you're doing is you're waiting for this to go into around about 10% profit. Now what that means is that would have to come down by about 1% for me to get 10% there, because I'm 10x leverage. Remember, now the amount of my trade is $3. All right, that is basically $3 is 1%. Remember, I put in 1%. So if this goes up to, see, it's going up now. If it goes up to 10, anything over 10%, I'll go and add the original 1% amount, which was $3. Right. So if it goes over 10%, here negative, I'll go add $3. So to Turbo. So while I'm waiting, if it was the only thing I was trading, I'd actually just put $3 and make sure it says USD there. It looks like it's about to go. And I would hit another short as soon as it gets to 10. Looks like it's taking its time. This one here, like now, this is the other one. Now this is the other scenario. This is where it goes into profit. So what I would do is, as soon as this coin here has gone into more than 10%, it's like, but if it's gone more than 10%, what I would do is I would go take profit, stop loss, trailing stop, interval, and I'll go ratio. And then what I do is I go 0.25, right? And I'll go confirm. All right, so now that's going to bubble around, do whatever it's going to do. If it goes to 45, it'll capture all of that. If it goes to 37.5, or 30, it'll cut out with profit. So it'll automatically take my profit. Now this one I'm trying to make to lose money, and it won't lose money. So we've basically got 75%. Remember I said it was 0.25 trailing stop loss. That means 75% of that profit, whatever that dollar amount is, or 75% of that 40% profit, no matter what this dollar amount is. So this is the magic. If you scale up and you do this for a long period of time, you get really used to it, you scale up, you can start off at whatever dollar amount you want. Like I'm starting out with 1% of a $300 account. Now if I turn it around, now this is operating automatically. I've got a trailing stop loss here. Like if I go up here, like this is automatic, right? This has gone down, it's come back up, it's starting to go down again. Like if it goes down, it'll follow it down. If it moves against me, it'll lock in that profit, that 40% profit. There you go, just did it. Okay, so basically I just go to my position history. I go, okay, it's 38% profit. I started it at quite a while ago. I wasn't watching it, and it just went into 40% profit. So usually I'm watching it. Usually it's more like about 5 to 8% in sort of like 10 minutes or maybe up to an hour. But like if you're making 5% or 10% or 8% or 6% an hour, and sometimes when you're lucky every 10 minutes, or sometimes when it moves against you, you actually increase your size automatically. It actually gets quite interesting. It's not boring at all. So because the gains that you're getting, 38%, if let's say call it 4 hours, like so 17, 16, 17. So it's an hour and 21 minutes, isn't it? Yeah. So 38% in an hour and 21 minutes. Like and all you got to do is try it yourself and then sort of see what your win-loss rate is. And also the next thing is obviously is to show you exactly what happens when the position moves against you. I can't make it move against me, so I've got another account going with a little bit larger size. See if that's moved against me. No, that one went. I was just in the other room and I was watching this going. I was just telling the missus, like, I can't make this move against me. What am I going to do? I'm going to have to go to the gym now. But like the good thing is I can do this. I can just do all this on my phone. You know, it's just so easy. But what you do is when these positions do move against you, once it goes to -10, whatever your original amount was that you started with, like this one here, I think it was 10%. So 1% of this was $50. So this has already moved against me. There you can see it's done it once, right? So I've actually gone from $50 to $100, right? Because I added one more lot. One lot is on this is I'm naming it lot is $50, right? Which represents 1% of my starting equity, right? So there's your currency equity. That's your starting equity. So every time this moves 10% against you in your unrealized profit and loss, I add one lot, which is $50. And I keep on doing that until it comes in 10% in the green. Then I put on a trailing stop loss of 0.25. I click ratio and trailing stop loss, ratio, and then I click 0.25. If I was going to do it now, this is how I would do it. I go like this. I would go trailing TPSL, interval, ratio, enter here. I go 0.25, and then I go confirm. So it'll keep that percentage, take profit and stop loss ratio, and it'll follow it down. Same as what it's doing in the other account that I had going there. I've got the trailing stop. I think this is 13% in profit. This is the one we just did before. So let's go trailing stop, interval, ratio, in here 0.25, and then confirm. So basically, I know, don't laugh, it's a small amount. It's 12.49%. If that goes down to 10, it will probably take out the position. But if I've made 36, 37 cents from $3, I only put $3 in there. That's 12%. And I've done it, there you go, it just closed out. It closed out in profit, 27 cents, right? And it took from 18.18 to 18.24. So that's like that's 6 minutes. I've made 9% in 6 minutes. So you see, once you do this enough and often enough, it will actually show you that if it's safe to size up. I'm not going to tell you it's safe to size up because I can't tell you that. See, just be careful with this too. It actually defaults to cross leverage, and it defaults to like really, really, really high leverage as well. Just watch that. I'll leverage. Unless you're doing technical analysis, I would not go over 10x leverage. And unless you had a strategy like mine that I just showed, you can't just start off wherever you want. Just blasé, come in here, click this, go to here, find the highest one that's pumped, go market, and then just go 1%, click trade like that, and not even think about it. Don't do that. unless you're doing, you can't do it with 20x, 25x, that requires an actual trader. You have to actually manage, look at where the market is and actually set a really tight stop. Here you can see there is no stop. Liquidation is the only real stop, and then we basically cut in before it could hit there by watching it. So this is only for live trading. I don't want to call it scalping because, I don't know, like, this can end up with some large dollar amounts, and you can be very, very well paid for your time for an hour or two's worth of trading. So depending on your scale and how much you size up, I recommend, doing N=1 experiment, like I always say. Test it out yourself. Watch this video over and over. If you want to, I am there for support. Like I'm there all the time in the Substack chat. It is paywalled because my time's not free. Like I don't have a job. This is my job. So if I'm servicing and doing customer service, to try and explain how to use these systems, I do a lot of free content so you can learn and pick it up yourself. Like I'm the training that I'm doing is worth hundreds of dollars a month just for the subscription. I'm charging like $12 a month. I'm telling you that my subscriptions that my community supports me with, it's not going for beers down the pub. It's not. I don't go out. I keep on studying and learning and getting better and better and better. And I want to create this system that can be easily followed. Because, but one thing I'll finish on this point, that I've noticed in this really, really advanced training that I'm doing, is very cleverly done. I'm really, really impressed. I don't often get challenged by anything much in relation to finances and money, as far as the understanding side of things, and to look at things from a fundamentals basis by somebody else. And there is certain stuff in the course that I pick up, and certain things I would just like file away in the back of my mind. But overall, it is a machine gun method of education, and it needs interpreter. If you're going to pick out one part, I'm very, very data driven and analytic, so I go do this, and you'll get this result. So I'm very scientific in that respect, and I respond best to that. A good strategy: do this, a little bit of nuance, a little bit of like, oh, that's what's happening there. But when you start getting some other stuff that's a little bit esoteric, where oh, what are they doing behind the scenes to make that price action happen? And then you understand it, and then you see it, and you recognize it for what it is, and then all of a sudden you find that they've given you some charts that actually color code it. So these are the market makers. This is the rest of the market. This is, and then you go, oh, right, it's a scam wick. It's designed to scam people just before they change the direction. For example, over here, big scam wick, big volume from a coloured candle, volume candle, yeah, and over here, completely reversed, a big stopping volume candle, and then they went up by, let's say, 1,000%. How does that suit you to know that? Well, those circumstances do happen, and they happen in every time frame. So depending on how much time you got, you can do 1 hour is amazing, and then you can start getting into the minutiae with these where you are in the market, where the CME's open. There's so much to this, but there's so much money to be made. But as I say, with that quick strategy there, I'll just leave it with you for today. And jump into the Substack, into the private chat if you want to ask any questions. And myself and there's other traders in there that'll happily steer you right and answer your questions as soon as they're available, depending on time zone and all that sort of stuff too. But anyway, thanks for your patience, and hopefully, if you've got any questions on the strategy, just shout out. Just leave a comment or wherever you can, wherever you've got access to, and I'll see you in the next video. And again, with the portfolio stuff, that you saw the start of this video, that's all the reference you need, is to follow these levels for spot. If you're just going to buy a little bit of Bitcoin every week, I think everyone should be doing that. Just buy Bitcoin, hold it in your own custody. Do not deposit with a custodian. Just do that, and you'll be better off than 95% of the market. All right, so start doing that. Forget about the trading. If you want to do the trading as far as some income, then just keep on following me. Maybe get into the Substack then, and I'll make sure you get your value for money. Anyway, thanks guys. I'll leave it there. See you in the next video.